Are we gonna go into a massive global crisis economically worldwide? It looked like that data tell us the potential is happened in 5 occasions. On the last 17 crises we have in the last 100 years, we got a very high probability this is happening because 2 components. We're gonna go into details now. So those are the 5 more places or locations where actually very clear is happen exactly the same thing we can see now. It's not, remember that pattern is not always exactly the same, but one of the things that's happened now which make it quite interesting is that the oil is actually crazy up. We are in a war and crisis is going up, yeah? Well, we are in a war, and from UK, USA is against Iran in a war right now, which is potentially is going to affect many others, but what really affected is the oil distribution. And that's where we have 5 points that may happen the same thing. So let's go for the next slide. Now, those 5, they are the most interesting candidate for this historical pattern, yeah? But it need to be kind of a sequence. Remember, the sequence doesn't need to be always the same, and I'll explain to you what I mean with it. So it can be let's see if I say the word correctly, geopolitical oil spike. We have that already. We got war, and it could be a war, could be actually inflation is high or not, it could be interest rate already being cut or not. And what really happens now, this is actually added another sequence inside of the current previous situation, historical. We tend to normally to look the previous historical patterns to get into this one. This can be isolated into the global of the 100 year, but if you use this pattern and we placed it into other 5, it's actually quite high probability that happens the same thing. So your typical oil spike, rising inflation is going to up. We already have an inflation that is not clear out, and potentially we're gonna have even worse. Now the consequence, even if USA stop the war, the consequence is possible and slow economic growth. And what then that happen? Then the interest rate can be aggressively cut, and that is very important that you're aware of this, because if this is happen, well, the oil can go down then after that, or can go before, or can go after the aggressive cut is being happened. But we are now, oil is going up. It went down because if they thought the war is over, but the war is not over. So we're going to actually to continue up now. So oil is still up. It's not clear. If that is happen normally, what happens is oil and all the companies related with energy will go up, and stocks will go down. It's just simple like that. It's just like that. And this is actually a real problem for stage 2, what is actually inflation. So we haven't cleared yet the inflation from COVID, and we start to breathe in a little bit, and somehow, you know, we have 6 cuts from USA, and the last one was in December, because something was not correct. When we do have interest rate cut, it's because the economy is not recovered fully, and you need to start to push it a bit down. Before, when you start to recover, you start to take some money from the economy, but now economy start to get something wrong with it, and then you start to cut and don't take so much money from the economy to try to help. Yeah. So we have 6 cuts from USA. Yeah. Now the last one, it was flat. Okay. And now we have one next week. Okay. Or I think it's today is 12. I think it's next week. By the time this video is out, for sure, that we already know what's gonna happen. Something. Let's see. Yeah. So now, when we are in inflation high, the pressure is higher, and what is going to be doing it? The banks is going to cut drastically 3-4 points, and they're going to drop drastically cut. And when that happens, we are in danger. And I'll show you how bad is this. Yeah, this is what will happen. We are now on 6 cut, and based on the last 17 cases, 14 of them, I would say 15, but so let's say 100%, 14 of them happens that we go more than 6 cut, and there was a crisis after. When it's 10, it's a high probability of 92% probability. 6 cut is 82%. Then we're gonna go for 92 probabilities, 92. But now we add on top of that, we add oil factors, which increase the probabilities even more. We do not have 10 cuts. You got early 6 cut, which is actually 82%. Now we're gonna add another factor into with this oil, and oil is happening only in 5 occasions that we have oil spike up, war and spike up, and we got one of them that actually makes more sense than the rest, which is actually very similar, and it was a big continuations of oil up, oil down. It was crazy, and one of the things really matters the most is the follow. Yeah. So, and this is the 5 occasions. We got a we're not going to talk about World War One, is 1937 reception, all that. But one of the really matters for me is 1973 to 1979. It was actually oil related. It was war, and then it's non-stop, and it was crazy up, down. And the most important thing, it was only 7 to 9%. Now we are on 25% global stop the distribution of 25%. It's not 7 or 9. We're talking about 3 times more. So this is actually very dangerous. And we have it was an announcement yesterday that actually they released the most number of barrels or reserve ever in history, 400 millions, which is only equivalent for 4 days globally, which is 25% divided by 4. Then you go about this 10 days, 15 days. We see how long it lasts, that oil reserve, and then what they're going to do after. So it's past 2 days now. We go 10 more days. Then what is next? What do you do with the reserve? Why you actually get out the reserve out? Is because we have a problem now. The other way you will not doing it. No? So it's like, they try to before we have the problem. No, you have a problem. You admitted that you have a problem. Okay? So now they go the Gulf War 1990, very similar. And we go the 2008, which actually very similar to 1990. Is actually even more close to 1973, but it's because it was the interest rate cut, then they went oil up, then down. But the one really actually create more sequence or more similar is the oil embargo and Iranian crisis, because it's actually the same thing. It's the same name. But 1990 is very, very close, and the 2008 financial crisis actually worked out kind of similar, but it was fast as well. Maybe we have something the same, oil up, oil down, and the crisis happened. I don't know, we'll see about that. We don't know which one of them, but it's from 1973 to 2008. Those 3 is the more actually precise one. We're gonna work into 1973, 1979. If you think one of the other things is more important one, let me know. Yeah. So just remember that we are actually in danger. We are on current 6 cut rates. Okay, but patterns is not 100% predictability. So I don't believe in 100% pattern. Is this one is exactly the same as that one. That one, this no. So, but will this time will be different? I hope yes. But happen 5 times that we have some variations. It's not exactly the same, but happens that the oil start to go crazy up. And if for any reasons we have interest rates cut drastically, then the odds is in the favor of being safe. And this is what I do myself, and already start doing it. I went from 70% on cash to potentially 90% right now after the oil start to happen. So 80% potentially, if it's going beyond that, it will happen more. It's like I'm very defensive right now. So the most important thing is to be patient, be safe, and be in control. Talk about finance, but be safe. Talk about from family's perspective. People. It's just we are in it's a war started that maybe actually affected everyone else, and we're talking about financial crisis and all that, but they actually suffering there. That is wrong. It's why are we doing this? I don't know. It's always the same. It's always the same situations worldwide. It's never changed. The history has been repeated again and again. Okay, guys, be safe. Take care of everyone that you can, and this is well. Let's go back to the presentation. Okay, so when this has happened, it's between 6 to 12 months, and when the cut interest happened, okay, it's actually happened. The last one, 6 cuts happened in December. So I will say that we start to have problem. If not December, I would say June, but let's call it December with the 6 cut when the dangers start to happen. But if we talk it from June. When the actually first cut happens, something was not right, and we start to see it escalating down. So we're thinking that there was a pattern already happened. So is that we are in 6-12 months. We are now before June. We're supposed to actually to be clear that we're gonna be in a crisis. yeah. So either if it's December, it's the late options will be actually December next year, so this year, or will be June this year. So is that's before summer or before Christmas, we're gonna have been in a crisis, yeah. So the most important is being in control, and what I'm going to do in the next video, I'm gonna focus on 1973 oil crisis to see what I can find about that. I'm gonna focus in detail, and I'm gonna share with you guys everything as possible. I'm full on, non-stop, 16 hours a day working on this current situation. As a normally I don't do, normally I actually spend my hour or two. This is when you actually got you, when the market direction is clear. Now we are in a situation that we don't know what to do. Well, I know what to do, but it's like you're just preparing for the change. So when we need to prepare for when the market changes direction again, and take or say, okay, we are in a crisis or we are not in a crisis. So if you're in a crisis, what do you do? If you're not in a crisis, what do you do? So you need to be prepared for that moment, because as earlier you're acting, the better you to be in a position to actually to be safe in your investments. All right, guys. So remember, this is not a recommendation. This is my own personal situation that actually I've been actually a defensive investor, and this is how I take control of my finance. So guys, see you in the next video. Bye now.